All right, thanks for joining us today for our webinar, Payment Pain Relief, Modern Ways to Improve Cash Flow Without the Headaches, with Chuck Mooney. We're glad you're here with us today. Chuck is a 21-year veteran of the merchant services industry. His mission is to make credit card processing one less thing his clients ever have to worry about. His job is to stay on top of the ever-evolving payments landscape, allowing clients to work less and make more. Chuck is a published author, has been struck by lightning, and has appeared in 2 Paramount Pictures productions. Chuck will take questions throughout the webinar, so don't wait to submit yours. Use the Q&A module to post questions at any point. If someone's already asked a question about what you're thinking, just upvote it. Feel free to add any comments for extra context with all of the Q&A module. And with that, let's get started.
Everybody, happy Thursday. I am thrilled to share this stage today. I hear there are about 450 people in the audience, so I'm pretty excited about that. And I also very much look forward to seeing everybody at the conference in a few weeks. It'll be here before we know it. I want today to be, I wanted to have kind of a fireside chat feel to it. So like Carly said, feel free to shoot in questions as they pop into your head. And this is an audio check. If I'm talking too loud, just do this so I can see that, and I'll quiet down a little bit. But as Carly said, I've been doing this for a while. I am a 21-year veteran of this industry, seen a lot of change, and you guys have seen a lot of those changes along with me. The reason why I go by this Chuck the credit card guy, I just got used to being called that. People would see me at gatherings of one sort or another, and they'd say, "Oh, there's Chuck the credit card guy." So I just decided to embrace it and make it my brand. I've been a friend of SOMSA for 8 years, a client here in Fort Worth who is now retired. She spoke very highly of the association and the annual conference, and she said, "Oh, you should come." And so I've been doing so for ever since. I think my first show was in Savannah, and that was a lot of fun. Heavy rainstorm, a ghost tour, all kinds of good things. And then I've got dozens of some of you on the call, hopefully, and others who aren't, who I currently am honored to call clients. The agenda today is pretty simple. We're going to talk about current challenges, and then we will move into talking about integration versus non-integration on the payment side. And then we'll talk some about just enhancements and advancements, modern payment flows, changes are on the horizon, changes already here. And then we're going to talk about one of everybody's favorite topics, surcharging and dual pricing, because that's a fun one. We're going to get. Lyndon told me you guys want to get in the weeds on some topics, and so we will spend some time with our feet in the weeds on that. And then just talk about trends and future proofing. What changes are here, what changes are coming your way, and what can you do to stay ready for what's around the corner. And as you'll notice, and you've probably noticed already, there is no firm script. I'm not reading from anything. I do have an agenda, I do have slides, but I'm just going to say whatever pops into my head. One thing I want to do is just take a quick pulse on some of your biggest payments related headaches right now. This is a new thing for me here. We're doing, what you can do is there are options here, several options, and you can scan with your phone. You can scan that QR code and it will take you to these options, and you can punch in as many of them as you want. There you go. Somebody's jumping on it already. That's good to see. If you're on your phone watching this and perhaps multitasking, you can always shoot any comments or any responses into the chat section as well. And we'll be able to see that. Carly's going to help me keep up with those. Oh, this is fun. This is very rewarding seeing this happening in real time. And I did this myself, and I'm a liberal arts major, so I'm pretty fascinated. Okay, these are good responses because we will talk about a lot of these. I don't see anybody saying no headaches, everything is great. Um, that means none of my clients is on this presentation right now. Otherwise, that would be at 100%. But I see these dancing back and forth, and we'll monitor these. I know we've only got an hour, but we'll monitor these as the presentation continues. Just keep those coming. All right. The quick and obvious question, why payments matter. I probably jumped to the third one there, that cash flow directly affects the ability to manage staff and inventory. Instead of manage, we should have just said pay and purchase. The cash flow is what keeps the business going. And on the first one, the first note there, obviously, you guys know these are high ticket items. You're not buying a house, but you're not buying a loaf of bread either. I mean, it is a high ticket item. And so that makes the payments piece that much more important. We see patients paying a lot out of pocket. And the good news is on this check is that even the little things can go a long way. So if I can teach you one or two things here today that can improve on these other three, then we've had some success. Statements. All right. This is one that I would get a kick out of. I didn't do a poll, but I would love to see in the chat. How many times a year do you crack open a statement and actually take a look at it? It could be, some of you might do it monthly. Some of you might do it, once a year. Some of you may never do it. What I like to tell my clients is that it's really important that you do it at least once a year. I mean, you go to the physician and get an annual checkup. You might as well do a gauge of where you are with your processing costs. And this first in the green up here, interchange, what is it and what does it mean to you? Interchange basically is just pricing as established by Visa and MasterCard. And Visa and MasterCard come down from the mountaintop twice a year. They do so in the spring, they do so in the fall. And they tell all of us in the processing industry, here's what your true cost is going to be. And we all start from the same starting line. Some people like to call you up and say, hey, we've got wholesale pricing or we've got discount. No, we all start from the same place. Visa and MasterCard does not play favorites. They hate us all. And so we all start from the same starting line. With regards to your statements, some of them are 2 pages long, some of them are 12 pages long. No matter how long or short your statement is, there's really only 2 numbers on the entire document that really mean much of anything to you. Sometimes I think that they are confusing by design. If we can throw a bunch of numbers at you and you can't figure which way is up and which way is down, then we've got a better opportunity to charge you more. So the 2 numbers that really matter, the first one is, how much was I charged this month? How much did I pay to process last month's transactions? And then the second number that matters is the total volume that you processed. You take those 2 numbers and you divide the big number into the small number, and that will produce a number on your calculator screen. And then you're going to find the decimal point, and you're going to move that decimal point 2 places over to the right, and that's going to give you your effective rate. Your effective rate is your bottom line true cost. It takes all those different lines, all those nebulous, weird, strange numbers on those 12 pages of that statement, And it just boils it down to the bottom line. And I would say from experience in working with many of you, my SOMSA clients, your effective rate really should live between 2 and 2.5%. I've actually got a couple of you who are just barely sub 2%. I did some checking not too long ago. I saw 1.98%. That's fantastic. And those are folks using just the interchange plus pricing. That's where the practice is shouldering 100% of the processing cost burden. For those of you who decide to do something different with the passing of the fees, some or all, your effective rate is going to be 1% or lower. And we will talk about that in a little more detail coming up. Okay, I just want to breeze through this real quick. To integrate or not to integrate? That's the question. Most of you are utilizing, there's probably 2 or 3 of the leading practice management software solutions out there, and they have chosen to have an integrated embedded payments partner. That ought to be great. That ought to be fine. But one of the most important things there is that when you invite somebody to come in and be your one and only processor, it has to be the absolute best case offering available. So the pros of integration are obvious. I mean, you've got seamless payments, seamless reporting, 0 manual reconciliation. The cons are, in most cases that I've seen, you're going to pay more for the processing of the credit cards, and your freedom of choice has been eliminated. You only can do what the embedded payments processor allows you to do. The pros of non-integration are you're going to get better pricing, you're going to get better savings. You're probably going to have access to some additional tools. We'll touch on some of those here shortly. And anecdotally speaking, what I'm hearing time and time again is you're going to get better support. You're going to have somebody you can just pick up the phone, direct point of contact. You got a question, you got a problem, boom, one call, one text, one email. A couple of quotes, you can see those here. My favorite one, under the pros of non-integration, of separating your payments. I don't know if this person is on the call today or not, but we've got a SOMSA member who, right after the meeting, we partnered with them last year, and now they're saving on average $12,000 a month. And I love that. I mean, I just love the fact that we could do that for somebody. It's fun to right wrongs, and it's fun to write in and provide people a better path. The cons of non-integration, hey, I'm open to that too. I'm aware of that. I was told last year, hey, look, I know you can save us a lot of money, but we had a problem with some manual reconciliation, some errors previously. And so our doc has said, hard line, we're not going to do any payments outside. So to me, the big win for the integrated payments platform is just there's no manual. I mean, everything is right there under one roof. That's the big plus. Some of you, if you've been around in the industry long enough, you probably identify your career probably started with the image at the bottom, and now we have worked you up to the person at the top. Things have gotten so much better from a payment standpoint, and the good news is it's not going to stop. It's just going to keep evolving, keep getting better. Some workflows, some improvements that we're not just rolling out, but we're seeing in the field right now. The updates to the card present terminals, when your patients are there on site and they're making payments right there face to face. We've gone from the swipe, and then we went to the dip, where you're just inserting that chip card in, And now everybody's tapping. I mean, I'll use myself as an example. I didn't think I'd ever be a tapper, but man, I'm tapping my card everywhere I can now. It's easier, it's faster, it's safer, and that's just one improvement, one enhancement. So make sure your terminal can at least do the tap to pay. But then right on the heels of it is the Apple Pay. I'll use myself as an example again. I never thought that I would be one of these people who's out there paying with my phone. But we're seeing it more and more and more. And it's not just the young kids, it's people my vintage and older. Then another really great tool, and we're putting this in hands as fast as we can. The virtual terminal tie-in. Ideally, what I'd like to see is one of these latest and greatest physical terminals for card present transactions, and it's going to be linked to your desktop-based virtual terminal. With that virtual terminal, you can do it all. You can key in transactions if somebody's calling in with card number over the phone. You can store patient data. And I know sometimes that makes people's spider sense tingle, but in our research of HIPAA requirements and so forth, as long as we're doing it in a PCI compliant and encrypted format, then you guys pass the HIPAA sniff test. What you can do with those, you get out of the constantly asking the regular patient, hey, what was that card number again? And you just move into should I use the card on file conversation. You can also do recurring billing if you need to break up a particularly large procedure into multiple payments. You can just go into your virtual terminal and tell that virtual terminal, hey, virtual terminal, we're going to bill this card number X number of dollars for the next 6 months. And then also with the virtual terminal, you can create payment links. And those payment links can be attached to invoices that you can use, that you can create within the virtual terminal. And then also, there's always payment reminders. In this third note down here, if you're doing, you can send a payment link by text, you can send a payment link by email, and you can even create a payment link and attach it to your existing website. And the payment reminders piece is great because you can tell the virtual terminal, okay, I'm sending this payment link by text. And if we don't get paid, I want you to send a reminder every 48 hours until we do receive payment. And it allows you to just kind of take off that collections hat. You're there to do 100 other things. Chasing down payments should not be one of them. As far as the real impact and what that looks like to you at the desk or at the counter, in my opinion, in my experience, more payment options just make a happier client, happy patient, happy customer. It's fun to say yes. When the patient says, can I pay you this way? Can I pay you that way? Just nod your head and say yes. And then faster accounts receivable. And we're also going to help reduce or eliminate the slow pay or no pay. Again, take off that collections hat and put it in the bottom drawer, and you'll never have to put it on again. And just a reminder, technology is a good thing. Computers are our friends. My goal is to put tools in your hands that will allow you to work less and make more. Okay, here's the fun one. So transparent fee handling, the whole surcharging versus dual pricing. For years and years and years, the only option was for your practice to pay 100% of the processing costs. And our goal on the payment side was let's reduce that bleeding as best we possibly can. But Visa and MasterCard have kind of worked against us in that attempt because the interchange costs just keep doing this up and up and up and up and up. So even when we cut it to the bone, it's still very, very expensive to process credit card transactions. And I see some chat stuff popping up. Let me see if that's for us. Um, and then Carly, you feel free to jump in if anything comes your way. Wave me down if need be.
Yeah, Chuck. We did get one question. A few people, Stacy asked a few. I'm starting to get a few people asking us about taking Afterpay instead of Care Credit. Anyone else seeing that? What are your thoughts on this being part of accepted payments?
If by Afterpay, and Stacy, you can jump back in if I don't hit this on the head, but if by Afterpay, I know Care Credit has always been the kind of the in-house financing solution. Um, what you can do with the recurring payments feature within a virtual terminal, you can kind of create your own in-house payment plan, um, and it does allow people the opportunity to kind of stretch out those big payments. I think that's a great thing, especially if you're applying a fee to the processing costs, because that will help cover that each time a payment or collection is made. So hopefully I got close to answering that question. If not, definitely fire off another shot and I'll watch for Carly to pop in. Um, with these, we were talking about the escalating cost of processing. I keep saying Visa and MasterCard because they really are the drivers. Um, well, truth be told, Visa is probably the 800-pound gorilla, and everybody else just tries to keep up. So they're the genesis of merchants starting to take advantage of the regs and the laws that say you can pass some or all of those processing costs. The one thing we have found as we're entering into the professional space and acceptance of this is growing in that professional space, that the absolute key is transparency. You're not doing anything wrong, so we're not trying to hide anything. And good, clear, advanced communication is absolutely essential. If there is one valid complaint from patients where we've rolled this out, it's if anybody has ever said, hey, I feel like I got blindsided. I didn't know. I didn't know until I paid for this treatment right here. So just take steps to eliminate that. Make sure that that cannot happen. There is signage that is required to be posted. And I would put up a little sign in advance, say, hey, in 30 days, we're going to institute a new company policy with regards to payments, and spell it out. And then you might want to go as far as to put it on page 2 of your website or some logical place where a reasonably intelligent person will be able to find it. I don't know that I would put some big banner on the top of the main page of your website, but we just want to have things that we can point to if ever questioned about advanced notification. It is a growing movement. You are not, if you do it starting tomorrow, you are not going to be the first person to the dance. The dance started years ago. Everybody's in there having a good time and encouraging you to join. The key is this bottom one. There's ways to do it wrong and there's ways to do it right. And just make sure you partner with a payment processor who can help lead you through that minefield and make sure that you're doing so in a compliant manner. Now, here come the weeds. Surcharging. Surcharging is one of my favorites in this space. It's one of my favorite approaches because it allows the practice to kind of be a nice guy, because you can say, hey, yes, I'm going to add a 3% fee, and in surcharging, 3% is the max. It's the ceiling of what you can charge. But you can only apply a surcharge to a credit card. It's credit card only. That means it's not applied to cash, checks, ACH, and debit cards. So that's where you get to be the nice guy. You say, yeah, we're going to put that 3% on your credit card, but if you hate the 3%, you can pay us with your debit card. Hi, Carly. What do we have?
Yeah, yeah. So Miranda said something onto that point. The state of Maine restricts surcharging and applying
Mhm.
a fee for credit card processing, but we do have the option to offer a discount if payment is made via cash or check. Is this correct?
That is correct. And somebody's already beat us to the weeds. Um, there are select states and one territory, Connecticut, Massachusetts, and Maine, they do prohibit surcharging. Also, the territory of Puerto Rico. So, with you guys, we cannot do the surcharge, the by definition surcharge, but don't give up hope. There are alternatives, as you've noted in your question, and we're going to get to that. Um, right now, surcharge, I'll tell you, there's in one hand, you've got surcharging, and on the other hand, you've got dual pricing, or some people call it cash discounting. And that was what was just referred to in that question. It is a definite attractive, viable alternative. Um, but let me run through surcharge first, and then we're going to get to the other. Um, can't be applied to certain insurance payments. Um, one example that was brought up to me recently, Delta Dental. Delta will say, hey, you're in violation of our contractual language, and we'll talk about that in a little bit more too. The thing with the HSA and the FSA cards, for years, these cards were issued and they were riding on the debit card rails. And that's an oversimplified term. I'm going to say there's debit card rails and there's credit card rails. And when the cards were exclusively on the debit card rail, your processing system, whether it was a physical standalone terminal or whether it's a virtual terminal, it can sniff out the difference. It's intuitive enough where it can sniff out the difference between a credit card and a debit card, and it would just automatically not apply the 3% fee to one of those payments, or even insurance P cards fall into that category. But a couple of years ago, we noticed something's going on, and these cards they started being issued on the credit rails, and it was confusing the systems. And what it was doing, if that card was approved for $100 and you tried to put it in for $100.01, it would decline. And so we found some workarounds for that. Um, debit card is a debit card is a debit card. It doesn't matter. Some people say, well, I don't need a 4-digit PIN number, so it's not a debit card. Or it'll say, I chose credit. It said credit or debit, and I chose credit on the screen and ran my card like that. If it says debit on the face of the card, it's a debit card, plain and simple, and you cannot apply the surcharge to that. Um, the surcharge is going to be very clearly displayed on the patient receipt. Again, we're not doing anything we should be ashamed of. And that's another thing that I like about surcharging is that on the receipt, it'll show $100 transaction. Right below that, it will show surcharge of 3%. And it's very transparent. And the American consumer has shown us over a great body of work and time. We're probably 10 years into this now. The American consumer has greeted this with kind of a collective yawn. They've said, yeah, I get it. It's the way things are now. And they've said, you know what? 3% to keep on using my credit card, I'll do it. Um, the disclosure, we're going to show you some signage here in another screen or two. If you ever had to return a transaction, you got to return it for the full amount, including the surcharge that was collected. And then I got to mention my friends in Colorado. Um, I actually had one of the SOMSA members from Colorado reached out not too long ago and wanted to talk about surcharging. Colorado decided, yeah, you can surcharge credit cards, but we're going to cap it at 2% because we're Colorado. And the way their language is written, it's open to a lot of questions because it says capped at 2% or the equivalent of what your credit card processor is charging you. And so in my mind, I always thought, well, if your credit card processor is charging you 3%, which they very well may, that language says you can also do that. But Visa does not agree with me. There is an attorney out of the state of Georgia. She has started speaking and writing to the contrary. So it'll just be really interesting to see where that goes. I would just say if you're in Colorado, cap it at 2. It'll greatly reduce your effective rate, and we'll just let the rest of that debate rage in the courts. Acceptable signage, I just pulled this directly off of the Visa website. Visa does think that the world revolves around them. But if you just take the word Visa out of the sign on the right, it's a perfectly good sign. What they would like in a perfect world is for you to have a sign at the entrance and then a sign where the patient's going to check out. And that language, I would make that available to anybody after this show who would like to see it. Go ahead, Carly, what you got?
Yeah, so we got a couple coming in.
Okay.
So Victoria said, our office just recently started surcharging. Once the payment is processed and showed the surcharge amount, do we need to post the amount we collected plus the surcharge amount in the patient transaction?
I have some who do both, and I always defer this. I always tell everybody, I'm not an attorney, I'm not a CPA. So what I would do is have that conversation with your CPA, and then also when we're at the SOMSA conference in a couple weeks, let's start asking the question. I'm a big best practices guy, and I'm not the one in the same trench as you are. So I would say, let's talk to other SOMSA members who are currently surcharging and find out what works best for them. I do know one thing that's important to note is that state to state, the governing bodies there, the comptroller's offices, et cetera, they do consider every penny that you collect to be taxable income, even though you're just a pass through, because ideally, go back to that $100 transaction that has now the 3%, the $3 tacked on there. The $100 is going to get deposited into your bank account the next day. The $3 will be snatched out by the processor if you're doing that on a daily basis. So yeah, I would love for others on the call right now, if anybody out there is doing surcharging, talk about how you are reporting that and how you're breaking that out. I just love some real feedback from the trenches.
Perfect. We got one more question. Sarah asked, for a refund, what if it is a partial return of the original purchase? Do you prorate the fee charged?
I'm going to get back to you on that one. What they're going to want, if it's a partial refund, they're probably going to want the equivalent of what 3% would be applied to that partial refund. I'm saying that, but I'm also asking if you would grant me an opportunity to confirm that, and I'll figure out a way to get that answer back to everybody. Lyndon can probably help me with that. Okay, I'm writing that down. Thank you. Good question. Okay, with this whole insurance thing, the insurers consider their contracted allowed amount. That's the payment in full, and they don't want you adding anything else to that. So there is a workaround, and we're doing this some places, and I've talked to some other colleagues in the industry across the country. This is their go-to, that first option there. You would just create a separate MID, and the only thing that you would run through, if it's a separate standalone terminal, or you can have multiple MIDs. And when I say MID, I'm sorry, that's a merchant identification number. So you'd have one merchant account, For patient payments, out-of-pocket payments, you would have another merchant account exclusively for insurance payments. The one account would apply a surcharge and the insurance account would not. And you would have different pricing on both those accounts so that you're not penalized when you run an insurance payment. You would just surcharge the patient piece, leave that insurance paid portion alone, and then, as noted by one of our attendees earlier, there is this other option, and it's dual pricing and cash discount. And we'll talk about that here. Dual pricing, I'll jump right to this third note. We've seen dual pricing for decades. All of us, every single one of us has seen it. Every single one of us has participated in dual pricing, and that's at the gas station. Not that there's any connection between gas stations and oral surgical practices, but gas stations pioneered this a long time ago. You'll see, even when they're flashing their pricing on their lighted signs, there's a cash price per gallon and there's a card price per gallon. They advertise it. We know it. If you pay at the pump, you get the more expensive, the card price. If you go inside and pay with cash, you get the lesser price. Apply that here in your own practice. What Visa wants us to do with cash discount, dual pricing, they want you to front load or bake in the processing cost into the estimated price of the treatment. If a treatment today cost you $100, if you were going to switch to dual pricing, you would change that price, that estimated price, to $104, we'll say, because there's no limit what you can do on cash discount or dual pricing. There's a 3% cap on surcharge. There is no cap on dual pricing. I guess for the sake of our conversation, we'll leave it at 3. So what used to cost 100 would now cost 103. And the way it's now advertised is if you pay by card, and you can do both cards here. This applies to all plastic. There's no leniency for the debit card. So it's $103 if you pay with plastic, and it's only $100 if you pay by cash or check. And the hoop that you need to jump through is simply the changing of the price, the original price that's communicated. You need to communicate the higher price, which is the card price, but you can talk up, hey, look, if you pay with cash, pay with cash and save. It's a more cheerful, more positive, from a marketing standpoint, it's a more positive message to pass along. Pay with cash and save, pay by check and save. And there is no fee that can be seen because it is baked in to the estimated price of the service. And it also, that last note there, then you avoid the whole insurance debacle altogether, because the quoted price for the treatment is $103. And if the patient so chooses, they can get the discount by paying the old-fashioned way. I hope that makes sense. There are positives to both. When done properly, I don't think you can go wrong either way. But the most important thing to note here with the dual pricing is it applies to all plastic, even if they pay you with a debit card, because the price, if it were a restaurant and you had a menu, that procedure would be $104 on the menu. Okay, coming out of the weeds somewhat, and you can always ask questions, like I said, along the way or at the end, there will be a Q&A session. Trends on the horizon. The reported demise of cash and checks is premature in your space. And again, this is just statistics from what we see on our end. I'd love to hear more about what you're seeing in the trenches, but we've seen growth in ACH acceptance steadily year over year since 2013. And that's a large snapshot. And where I'm seeing it personally with my clients is with the adoption of the virtual terminal, sending out payment links, a payment link that has, hey, you have a choice. Do you want to pay us with the card or do you want to pay us by ACH? It's so great to have those two options there. Again, it gives you a chance to say yes one more time. Same day settlements. It used to sound like science fiction. When I first got started in this industry, 48-hour turnaround time was the norm. If you processed the transaction on Monday, you saw the funds hit your bank account on Wednesday. Then the industry got a little more aggressive. And all of this, I mean, it ties in the banks at the highest level, it ties in the Fed. They're the ones who drive the whole bus as far as the timing of moving money. That's why you don't see money move on the weekends, because the Fed's not open and the banks aren't open. But next day payments, I would say most of my clients right now are receiving next day payments because you guys aren't open till all hours of the night in most cases, and you batch out and settle at the end of the day at a fairly reasonable time. So next day happens like clockwork. But now they're in discussions where there could be technology in place that would allow same day deposits. Okay, I saw some chat stuff come up.
Yeah, so Miranda asked, do we have cash discounts posted? Do we have to have cash discounts posted similarly? Yes, to surcharging for all patients to be aware, or is it okay to have this listed on our treatment plan pricing that the patient signs?
Great question. So you do not have, with dual pricing, you do not have the same signage and notification requirements as you do with surcharging. What I have seen people do is they'll post pay with cash or check and save. Because if you think about it, with dual pricing, there's no addition, at least no visible addition of a fee. It's just that thing that used to cost $100 now costs $103. So there is no notification to be made. It's just a $103 procedure now. And oh yeah, by the way, great news, patient. If you want to save some money, then you just pay us with cash or check. So no signage required for cash discount or dual pricing. AI, we keep on hearing about AI and how it's going to take all of our jobs. And everybody's getting into Chat GPT to write their thank you notes and things like that. But we're also in our industry, we're able to harness AI, and it's doing a lot more real time fraud detection, which is great because the bad guys are stinking brilliant and they're so demented and motivated that they are constantly coming up with new and different ways to separate good people from their cash, which brings us down to the tighter compliance expectations. We're going to talk a little bit more about PCI compliance coming up here. 5 years ago, probably a third of you on this call had even heard of PCI compliance, but I guarantee you everybody on the call has heard of it now, for some for good reasons, others for not so good reasons. And I'll talk about that more here briefly in a moment. More flexible payment options. We've talked about some of those. And then the on-site payment options. Right now I talked about Apple Pay, and that's, so that's our cutting edge right now. But you're seeing more and more beyond the tapping of the phone, the tapping of the watch, the tapping of the ring, that's out there. I've seen that just, be set up so that you can do that. And then I think probably the next stop in that technology train is probably biometrics. Maybe it's a thumbprint, maybe it's a retina scan, but and God forbid an embedded chip. I mean, I hope I'm retired by the time that comes around, but we'll see. All right, when we talk about future proofing, the first thing I would recommend, you want to have somebody in your corner who's staying on top of this stuff. I I loathe the thought of any of you getting on electronic payments chat boards and subscribing to industry journals and trying to stay up on top of the latest and greatest in the payment processing industry. You should not have to do that. I don't want any of my customers thinking a minute's worth of bandwidth on electronic payments. Have somebody, have an ally, have an advocate, and have that person be responsible for thinking all of it and then reporting it to you. The get compliant and stay compliant. So briefly, because I know the clock is ticking, PCI compliance. The full name is PCI DSS. It's Payment Card Industry Payment Card Industry Data Security Standards. And it is a set of recommendations put together by Visa and MasterCard. And really what they're designed to do is just make sure that you don't become low-hanging fruit. There's two kinds of bad guys. There's the bad guys who chase the headlines, and they're the ones who hack into the Pentagon. And then there's the others who they like to eat and pay bills and make a little money. And so they're constantly scanning for the low-hanging fruit. Who left the back door unlocked? And PCI is designed to set a minimum standard to help ensure that you at least avoid becoming that low-hanging fruit. Now, I think in a future slide, I say it's a good idea gone bad, and I'll just jump ahead and talk about that. I love the concept of PCI and data security and protecting cardholder data, but they've made it so stinking complicated. You almost have to have an MIT degree to blow through the assessment your first time. It's very challenging, and now to compound matters, some processors have seen fit, and some of these processors you guys might be directly familiar with. I saw a statement the other day, $225 a month PCI non-compliance fee. So they set the bar really high, they make it really difficult, and now they're making it really expensive if you don't take the time, spend the time to get compliant and stay compliant. I just personally, that rubs me wrong. Then redundancy. Let's talk about future proofing. Some of you got zapped last fall, late in the year. A very reputable gateway called BridgePay. The bad guys woke up one morning and they spun the wheel, and the wheel landed on the name BridgePay. And the bad guys said, you know what? We're going to destroy BridgePay today. And so they hacked into BridgePay's system and they locked it down and they held it for ransom. And so as a result, there were hundreds of innocent and helpless other companies who were utilizing BridgePay's gateway, they were just locked down. They were incapacitated. You could not process a payment on their product because it was tied to BridgePay. And so people were left scrambling. I know some practices were probably stuck not being able to take a credit card payment for as long as probably upwards of 3 weeks. And so what I try to tell all my people is have a safety net, have a contingency plan in place. Just know that technology, despite all of our efforts, is also vulnerable. So we got to stay one step ahead. And for me, the greatest contingency plan to take credit cards is to have either a standalone 4G terminal something that's not dependent on your internet, something that's not dependent on a gateway, where you can still just keep taking cards if disaster strikes. Or another alternative is where a lot of people ran out, within days after the bridge pay outage, they ran out and just got a Square account set up so that they could at least take cards. And then this last note, just harness the technology. It's out there. Make sure you're aware of what the technology is, because there's stuff out there right now that's going to make your life easier. All right, key takeaways. These are some challenges that I'd like to issue to you. Do that annual statement audit. If you're the one who never opens up a statement, or you only do one a year, we want to calculate that effective rate at least once a year. You want to fall between 2 and 2.5%. And if you don't want to do it yourself, bring a statement to me at the SOMSA conference, and I'll be happy to do it for you. Second challenge I'd like to issue is test out at least one of the new workflow and enhancements. I use the example here of text to pay. If you're not doing this stuff already, try it out. I mean, it really can make life a lot easier. And then also the third item there, get amongst yourselves, talk amongst your team, talk about the idea of passing some or all of the processing costs. Like I noted earlier, the patient pushback is minimal, and I'm going to use this word, the savings are staggering. I mean, it's absolutely, I mean, if you could make 90% of your current processing costs go away, that's a beautiful thing. Add ACH if you're not doing it already. Some people, some customers, some patients really like it. Install that payment safety net that we just talked about. Have a contingency plan. And then this is just kind of a final thing, just kind of a fun thing. Keep a wish list. Wish out loud. Talk to your payments provider. Say, hey, I wish I could do this. I wish I could do that. And present those ideas. And you present them enough times, you might just see it happen. All right. This is the Q&A portion.
Yeah, thanks, Chuck, for taking
Sure.
the time to lead today's webinar. Collaborations like this help to ensure our members have access to real-world guidance as leadership and responsibilities and expectations evolve. We've received some great questions already. Quick reminder to use the chat or use the Q&A button in Zoom to submit your questions. You can also upvote any questions you'd like to see addressed and add any comments for additional context. Any first questions? Well, Chuck, while we're waiting for any questions, if any pop up, can we dive back into Stacy's question earlier when she asked about Afterpay, and you had mentioned when there's a couple different options for that, an Afterpay or some sort of third-party vendor versus doing an in-house. What are the statistics in that with the guarantee of getting the money, right? So using like an Afterpay, you're guaranteed to get that money and pay a fee, versus if you do some sort of in-house payment option with a patient, you're not always guaranteed to get that money. What do you think about that?
I think the best thing you can do anytime you're going to do any kind of recurring payment at all, same thing would apply to if you had a subscription plan or something like that. There's a form that we can provide where a person provides their consent for you to bill their card that X number of payments, X number of times. You want to be selective about who you make that recurring billing option available to. If your spider sense is tingling, you may not want to offer that benefit and do that on a patient by patient basis. But when you have that pre-authorization in hand, at least you've got a document that if somebody did decide to pull the plug and just stop paying, you would at least have in your pursuit of them in the recourse, you would have that document that you could present. So it does not come with the same level of protections and guarantees and assurances that, say, maybe a care credit does. But again, I would deploy that one on a case by case basis.
Perfect. Kelly had asked, do you have any recommendations for ACH payment portals? Their current payment processor does not offer ACH.
Okay. Personally, I use one and like one. It's called Paya. It's a product from a company called Nuvei. Paya is spelled Paya, and Nuvei is Nuvei. And they do a really good job, and they're pretty agnostic. They tend to work with just about anybody.
Perfect. What about, let's see here. What are your recommendations on leasing terminals versus buying terminals outright? If somebody was leasing their terminal, is that a problem? And should they try and get out of the lease? And if they need to get out of a lease, how would they do that?
Yeah. Lease to me is a dirty word. I've seen 100 bad leases in my career, and I've maybe seen one good one. Um, Leases are dangerous, and if not provided to you by somebody with a good heart, they can be very, very, very expensive. If I'm talking to a prospective client and they tell me that they're leasing their equipment, we call timeout and we stop everything right then and there. And we say, okay, provide me the documents, show me the lease agreement. And the reason why I say this, years ago, I did a little consulting job. I'm here in Fort Worth, Texas, and a local doctor group, physicians group, they asked me to come in and audit their electronic payments. And I found out that they had been leasing, across their network, they were leasing 100, I think it was 164 terminals. And it was on a 3-year lease agreement. So 36 monthly payments. Problem was they were in, I think it was either year 6 or year 9 of paying these monthly lease payments. Leases do not turn off by themselves. So that's the first thing. If I found somebody who was in a lease, I'd say, okay, let's see the dates and let's see where we are with regards to those dates. And then let's see what we can do to get you out of those. These terminals that we provide for the card present transactions, they typically retail like, let's say, 300 to for a wireless, like a 4G terminal, which are becoming more popular, by the way, because you guys started with this last year. People were saying, oh, yeah, we like to go take a payment while the patient is in the chair still. And I just had these visions of somebody on Novocaine just laid back and they're like, oh yeah, let me sign. But those terminals run, let's just say $500. So the value of those is somewhere between 300 and 500. If you lease or rent, you're going to end up paying way more than that. Just buy them outright, or if you're with a really good processing partner, they will just give them to you for free. There are people on this call today who got their terminals for free.
Yeah, Sarah had mentioned, do you have the ability to add a link to your processor to our website? Do you have a robot that can be programmed to auto post payments to our EMRs?
I want to make sure that I understand that question correctly. So, posting the link to the payment processor, are you talking about here and now or on your website? Tell me a
Tara,
little bit more about that.
Tara, I've made it so you can unmute yourself and ask your question if you'd like, but you're also welcome to type in your response to Chuck's question in the chat. She might not be able to talk. at the moment.
Okay. Um, make sure I get that question because I want to provide a good response for that.
You bet. Yeah, sorry, she's not on a computer with a mic, so
Okay.
she means online credit card payments. Sorry, Carly, I'll let you take
Online
over.
credit card payments. Okay, yeah. If you get me Tara's contact info, I'll follow up with her about our online payments.
Is that, Chuck, is that something that is usually set up through your merchant?
Yes, online payments for sure. That virtual terminal that I kept talking about, and there are several good ones out there. I'm talking about virtual terminal products. The one that we use has the ability to create payment links, and one of those payment links can be affixed to your existing website. And so patients in the middle of the night can, they're sitting there in their pajamas and they say, "Oh man, I forgot to pay my bill." So they can get on there and do that. And through that reporting, yes, that can be passed along, but I want to find out specifically about the EMR piece. But to wrap up on leases, leases are nasty. Avoid them. If you're in one, uh, call me and I can help walk you through minimizing the damage on your way out.
Awesome. Thanks, Chuck. That was great. Thank you for an insightful and practical session. And of course, thank you to everyone who joined us today. A recording, a slide deck, and any additional resources will be emailed to you tomorrow. Please keep an eye on your inbox. Two quick announcements and then we'll sign off. You'll see the QR codes and the short URLs on your screen. We're also dropping the links in the chat. If you haven't registered for the 2026 conference, now's the time. In just a couple of weeks, we'll be in Nashville, Tennessee, finding the rhythm of excellence. If you're coming, we invite you to the Denim and Diamonds at the Country Music Hall of Fame Friday night. Get your tickets now. Register at SOMSA.org. Finally, next week is our quarterly regional chats where you can spend an hour with your peers talking through issues and frustrations you're facing and celebrating wins. Register on the calendar at SOMSA.org. Thank you again for attending and have a great day.